Hey guys, welcome to this week's episode of Tapping Into Crypto. Now, we're away this week. This is a highlight of one of our most popular episodes for 2025. We're going to jump back into the seats with Andrew McPhee from Synergist, where he unpacks some of the key trends from the financial advisory space, particularly relating to Australia and how the landscape here measures up against the rest of the world. It's maybe not an unsurprising fact, but 89% of financial advisors, they're reluctant to talk to their clients about crypto. So if you've got that auntie or uncle wondering how's that Bitcoin thing going, well, this will give you some, some steady facts to stream back at them about just how different the landscape here is compared to the rest of the world. There's still quite a bit of adoption still to come. But anyway, with that all aside, we really do wish you have a happy Christmas and a happy holiday period. It's one of those few moments of the year where we all get to just stop and just take a break. So make sure you do that, because that's exactly what we'll be doing. Imagine you'll be just like us, full of too much food and probably too much Christmas cheer. But we'll see you all again for a special episode next week. We have a special Christmas episode that will be airing. It'll be Ted, Tommy, and myself. So we're really keen to share with you some insights and recaps of the year that's been. But for now, sit back, enjoy, and we'll talk to you guys soon.
If you overlay the adoption curve of crypto against, say, the internet, we are sitting at about 2002, 2003 levels. So there's a lot of growth, and we're tracking pretty much exactly, maybe it's just slightly faster than how quickly the internet has been adopted. So I think that we're on that same adoption curve a bit faster. The only thing beating crypto is AI adoption. We just follow what America does. We look at what America does, maybe the UK, and then we just copy what we think makes sense. The problem is innovation is happening so rapidly now that you can't afford to be a fast follower, because you're locking the Australian ecosystem out of that innovation.
Hello guys, welcome back to another episode. Today we're joined with a very special guest. It's Pav Hundal.
Good one.
It's not, but Pav
I'm
is
not
here
that special.
once again. But today we're joined by the Director of Synergist, Andrew McPhee. Andrew, welcome to Tapping Into Crypto.
Thanks for coming.
Oh, well, thank you for inviting me along, guys. I'm really excited.
Absolutely. So, what we're going to discuss today is financial advisors in Australia. And for anyone listening, just know that we're going to make it exciting, and it's related to crypto. Andrew is, quite a big figurehead in the space when it comes to bridging the gap between sort of the TradFi and then the financial advice industry in Australia, and also, that crypto and digital assets scene. So we're going to be discussing that, tailoring it to, how the listener may be impacted by it. And go from there. But first of all, I looked at your experience. You've got, just to name drop a few, you got ANZ in there, Ozpost for 6+ years. So quite the background. But tell us a little bit about yourself and how you came across Synergist and how that was founded, and your background in crypto.
Okay, a little bit of background. Well, I guess don't let these boyish good looks fool you. I've got about 3 decades of experience in and largely in the wealth management space. So, my experience goes back to building. I remember the first digital role that I had was building the very first website for a company which is now called Bank First in Victoria. So they were a mutual back then, and I built their first website for a financial institution. So that dates me. I also, back in the .com days, I built a share trading internet banking platform over in London for a big Scandinavian bank. So again, went through all that .com hype and bubble and bust cycle. Came back and got into and built helped build Australia's first 100% online wrap platform down in Melbourne. So wrap platforms are the platforms that the financial advisors use to manage all their clients' affairs. And they see consolidated portfolios. They can manage all the custody through it, all the compliance, reporting, auditing, all that stuff. So we built the first 100% online version of a wrap platform. I thought I'd better do some time in one of the big 4 banks, if I want to have a career in financial services in Australia. So I went to ANZ and ended up staying there for 12 years. And so I did a variety of jobs there, including running E-Trade, the retail business for E-Trade. When ANZ bought E-Trade, I was the first man on the ground with the blue shirt. And that was interesting, integrating it into the beast, into ANZ. But I loved it. We had an awesome team up in Sydney there and really enjoyed that self-directed investing, pioneering that self-directed investing space. Ended up running marketing for the commercial division at ANZ, so pretty senior role. Moved to Australia Post and ended up building My Post and My Post Business. So that's their two big platforms for Australia Post. And so I was the head of product or the product owner. So running those programs and then I kind of hit my threshold for corporate. I think everyone's got a limit.
Yeah.
And I hit mine. So I said, all right, well, what do I want to do? And I wasn't sure, so I started consulting and ended up setting up Synergist and have been acting as a consultant, a transformation innovation consultant for 8 years. I set up Synergist 8 years ago. A variety of businesses, but that led me into crypto and blockchain Web3 businesses. That really triggered off in me a real passion because it brought me back to my technology days. It brought together technology, innovation, and financial services in this really nice little blend. And I went, this is my happy place. So I really decided I wanted to focus in on that sector, on the crypto, blockchain, Web3 sector. That led me into then kind of realizing that there's a massive problem in Australia, which is the crypto service gap. So I pivoted or focused Synergist to solve that problem, and that's why I'm here.
And that's it?
I got married, had a few kids, all that stuff as well. But
wow, that's
I'll be honest. After hearing that, I expected more grey hairs. So well done to you, sir.
Well.
But just to tie back into, I mean, just thinking about that arc that you've sort of laid out for us, like how do you what does it take for someone that's been so heavily ingrained, from a your first principles point, like that, investment banking background or just financial services background, sorry, I should say. What was it, like you said, tech was part of like the reason why you were like very fond of crypto, but was there any other aha moments? You're just like, oh, look, people need to know about this,
Yeah. So it was the opportunity. And when I say the opportunity, it was really the wealth opportunity, because when I first got attracted to it, I didn't really know that much about the libertarian values and the role that it can play from a geopolitical perspective. And so that wasn't really in my consciousness. It was more as an investment class. And I just know that for me personally, it was something that I have been interested in for a long time, but didn't know how to invest in it and didn't know who to ask and didn't have time to figure it out. So I'd stayed out of it for probably 5-6 years, longer than what I otherwise would have. And everyone that I speak to, all of my peers, all the people my age at my kids' schools and everything, they all say exactly the same thing. And I thought, this is a big problem. We need to make it more accessible to, that 50 plus bracket, who, they've got big portfolios. They're seasoned investors. They're usually senior executives. They've got a lot of experience, but they don't have time. They don't know about it. And when they go and talk to their accountant or financial advisor about it, they talk them out of it or just say, I can't talk to you, and just close the door in their face. And that's the problem. I went, that's a real issue. And someone needs to solve that problem. So why not me?
No, I love it.
I guess you said it there. Like typically you're looking at a little bit of an older demographic that visits financial advisors, but it's also relevant for, younger people. And particularly, I think when it comes to the data, like 1 in 4 or 1 in 5 Aussies are currently in crypto, but then that's the majority of that is made up of like millennials and even Gen Z, right? So it's that older demographic that maybe doesn't know where to start, and then they can't really get the financial advice, as you said, from it. So I want to break this down into 2 segments. So if I'm like millennial age, 25 to 35, and I'm in crypto because it's currently not regulated, right? So you can't get that advice. But what do if I add a couple of zeros to my portfolio over a couple of years, make some strong investments, what can I do then? What discussions can I have with a financial advisor around doing what with that money?
Great. Okay, so there's a few elements in there.
Yeah.
So I might start with the numbers, all right, and then I'll come back to the compliance requirements. So the numbers, if you look at the numbers, it's about 32% of Australians have crypto, right? Which is we're like the ninth largest penetration of crypto ownership in the world as a country for Australia, and Gen Z or 25 to 34-year-old sector, it's more than 50% now own crypto, more than 50%. When you get to the older demographics, the over 50s, it's about 8%, 8.2%, something like that at the moment. But that's doubled in the last 3 years. All right. So it is growing. It's skewed to the more high net worth individuals within that bracket. But either way, it's still well below the younger cohorts. So there's a gap and there's an opportunity to go into that. So we'll talk about them later. But coming back to the question around the Gen Z or the younger investors, and what value they might be able to get from an advised relationship. Well, I think in the scenario that you put forward, if somebody's come in and they've happened to, push all in on Fartcoin and they're sitting on a 7-figure portfolio, then well played.
Yeah.
But
that speaks directly to our listeners.
Yeah. So well played, but take some profit. And that's, I guess, when I look at it, I say, look, there is... crypto is actually attracting all of these people because it's the same as what self-directed investing, equities investing used to be like. When it first came out, all the establishment was saying, oh, you're crazy. You're going to go and let these people invest in stocks without the safety net of an advisor. You're rebels. And we were anti-establishment, and now it's just taken as for granted. But back then it was fun. It was exciting. It was dynamic. It was real, right?
That was back, you go the clock back even further. No one touched anything but bonds, right?
Yeah.
So
20 years ago, that's when self-directed investing started becoming a thing, and these platforms, Comsex, E-Trade, eToro, these sites started appearing, and they were what crypto is now for that younger generation. It's exciting. It's actually a bit of entertainment.
Yeah.
It's engaging. And for that cohort, they're kind of locked out of everything else. I mean, this equities market is just boring now because everything has been squeezed into the middle with ETFs, exchange traded funds. It's taken all that, a lot of that dynamicism out of the market. And then they're excluded from a lot of the other investments because you have to be a sophisticated investor with, $250,000 of income for the last 3 years or $1 million in investable assets, or property, which, we all know the property affordability problem. So what's that left, right? That's left crypto, and it's a bit of fun, it's a bit of excitement, and it's accessible to them. So it's completely understandable that they've come to that. But let's say you have made a bit of money from it, and you're getting a bit older and you're starting to think, oh, hang on, I need to start thinking about, should I be buying a house? Do I want to start a family? Maybe I should propose to my girlfriend, or maybe I've just gotten married and we're thinking of a family. This is called life. It's part of the maturing process. It happens, I'm sorry to say. But, so you need to start planning for that. You need to start preparing for that, and your priorities start changing. That's where financial advice can help. Financial advisors aren't going to go, I'd probably sell half that Fartcoin and put in a Doge or something else. But they can say, look, let's start planning out for, your future. Let's set some goals. Let's diversify your portfolio. Let's get you set up with certain tax structures like family trusts or, that might help you into the future. Let's talk about things like self-managed super funds. These are all the things that they can guide you on and support you on. So I think this is a real valuable role for an advised relationship in Australia.
Yeah. And, I guess going back to the whole compliance dilemma when it comes to financial advice and crypto. So is there like a major roadblock at the moment? We were talking before this, and I think you used the term pet rocks. Now, I don't know if you want to bring that up again, but so is it like is it a cultural opposition to crypto, or does it just come down to being a little bit behind when it comes to regulation?
Yeah, the Pet Rocks commentary, that was a quote from Jamie Dimon, who's the CEO of JP Morgan back in 2018, and he referred to Bitcoin as a pet rock. And it's been held up as like, he's the chief cynic of cryptocurrencies globally, right? As a result of that comment and his profile, ever since. Now the interesting thing with JP Morgan is just in the last couple of months, they've now changed their position to say we're going to allow our customers to buy crypto. I mean, come on, allow you. Oh, how very nice of you.
Yeah, exactly.
But importantly, they've also said we're actually going to take any crypto holdings, ETF holdings, as collateral against your lending. So that actually is a significant step and a material, signal of acceptance of crypto. They're also building out their own blockchain as well. So Jamie Dimon, the biggest cynic in the world, has come around and he's actually begrudgingly accepting that it's a thing now. But the reason I mention that is because I've been speaking to a lot of financial advisors, and probably 50% of the advisors that I speak to actually will refer to that, say, oh, yeah, crypto is just a pet rock anyway, isn't it? And I'm like, wow, this is the problem. This is that service gap. They don't understand that the market's already decided that this is a legitimate asset class. You've got 32% of Australians already holding crypto. The combined, the value of Bitcoin alone is about the same as the combined market value capitalization of every company on the ASX combined.
Yeah.
It's like, guys, the market's decided, it is a legitimate asset class, but 89% of financial advisors won't talk to their clients about it. That's that disconnect. So why? To answer the question, they don't know what they can say and what they're not allowed, what they can and can't say. They don't understand it, so they don't want to talk about something, and they're not allowed to talk about something that they don't understand legally. And there's no financial services license available for digital assets yet. So they can't provide product advice.
Yep.
They can provide general advice, but they can't provide product advice. So what that means in practice is they are allowed to say, well, here's some facts, and provide fact-based information, education about the sector. They are allowed to do that. They are allowed to say this is the role that it might be able to play in your portfolio as part of a diversified portfolio, the role that it might play. And in fact, BlackRock, the biggest fund manager in the world, have just changed their position to say that Bitcoin should be 1 to 2% of any 60-40 balanced portfolio as a standard.
Massive.
So yeah, it's massive because that puts Bitcoin at the same level as Nvidia, Apple, Tesla. So that's a serious move. But coming back to it, it starts with the education for the advisors. They don't know what they can and can't say, so they default to saying nothing.
It's very true. Do we have a sort of timeline for when that'll change?
Oh, look, I think for any keen observers of ASIC in our audience, which I suspect isn't many, you would know one thing, and that's that, whatever ASIC timeframes they put forward, you can safely double it as an indicator of when they're likely to come out. Look, they're trying. They don't. It's a challenge. They don't understand it. They're trying to get it right. It's difficult. They are working. They've been going through an industry consultation process that finished earlier this year. They're working on a position. Treasury and ASIC are not aligned at the moment, so I think it still might be a little bit away. But this year they've said that they're going to come back with greater clarity around the treatment of digital assets. My expectation is that that'll help, but it won't give enough clarity for big advisory firms, dealer groups to actually put it onto their ASL necessarily, maybe ETFs, but probably not direct tokens.
Do you think a lot of it has to do with just the globalization acceptance? Like that'll likely need to come first before someone like Australia steps forward and gives an opinion? Or
it's a great question, Pav, because typically that is the approach that Australian regulators have done. Like publicly, they state, we're a fast follower. We just follow what America does. We look at what America does, maybe the UK, and then we just copy what we think makes sense. The problem is innovation is happening so rapidly now that you can't afford to be a fast follower because you're locking the Australian ecosystem out of that innovation. All that innovation will go somewhere else.
Yeah.
And you're seeing it. Everyone's going to UAE or Singapore, to set up shop. US are going to come out with their new regulations in the coming months. That's going to attract like a magnet a lot of businesses to repatriate back into the US. Australia is still going to be 12 months away. We're going to see a lot of businesses just simply go, well, why would I go here?
Yeah, it's a big deal because if you don't have that, you can't set up a bank account. You can't do anything, right? So you can't even offer a service in Australia, even if you were trying to we'll stay and see how it goes, when the banking system could just literally rug you and take your services away.
They can. But the interesting thing is that investors and consumers can, right? They just go and set up offshore.
Yep.
And then they're exposing themselves potentially to, tax issues. But they're also exposing themselves to providers who aren't regulated in the Australian jurisdiction, which means if you've got a problem, what, you're going to go to Bahamas and take them to court in the Bahamas? I mean, sounds like a great holiday. I wouldn't want to test their legal system. Whereas if you're with SwiftX or an Australian registered business, if there's a problem, you've got all the protections of the Australian Corporations Act, Consumer Code, all of that, which you're not going to get if you've gone off to some overseas provider.
Yeah, that's a good shout. Just to loop back to, we're talking about, was it 89% of advisors don't know how to, So when you do have these conversations and you have that educational step with people, obviously they have an open ear because they've invited you to talk to them. What do you feel like are things that they take away to grasp and then go, oh, look, I understand it now? Do you feel like there's certain turning points, like you can see the cogs turning in their heads, or it's just interesting for us. Obviously, everyone listening here likely has been in the space for quite some time. It's hard to sometimes relate back to.
Sure. Because
I think we all get it. Like you go to that barbecue and everyone goes, oh, how's your crypto going? You kind of forget what it's like to be on that other side to then make the leap into crypto. So yeah, just would be interested to hear what the smartest of the smart, obviously, how they come around to it all.
Well, you're assuming, first of all, that the smartest of the smart are on that side of the fence, not your side of the fence.
We have to believe someone is... It can't be us. Can't be us.
I'm sure they're somewhere. Anyway, let's not figure out which way. But no, look, so if I was to generalize, I would say that 50% of the advisors that I speak to fall into the pet rock category.
Legitimately,
right? Like they just simply will go. You talk to them and you're like, you just don't get it, and you probably never will. So that's probably about 50%, and that's frightening. Because that's a real risk to the actual advice industry in my mind.
Well, that's more culturally driven than it is data or fact driven. So.
And is that an age? Like some of these new wave financial advisors more accepting of it?
Without becoming too ageist, I'd say there is a correlation there.
Okay. Yeah.
And you've got to understand though, culturally though, these are people who have seen this speculative, hyped up asset classes come and go dozens of times. Pine plantations, lithium stocks, whatever it might be, the flavor of the day. There's always a hyped up speculative asset class.
True.
And they've become hardened to it, right? Yeah. And so it's easy to look at Bitcoin and cryptocurrencies in that light, because indeed that is what it was up until probably the last couple of years, to be honest.
Yeah.
But they don't understand that you've got sovereign wealth funds, investing in it, that you've got corporate treasuries investing in it, that there's 670 million people worldwide holding cryptocurrencies today, that stablecoins are now, there's more value transacted in stablecoins than Visa and MasterCard networks combined.
Yeah.
They don't know this because this is all recent, the last 2-3 years. And so that's the bit that, some of them, about half of them don't want to hear it, and that's okay. The other half, they're really interested, but they're feeling locked out of it because it's not on their approved list of being able to talk about.
Yeah, okay.
And they don't know who to refer clients through to. There's no approved pathway to say, look, I can't help you, but why don't you go talk to these guys and they can help you. And that's what I'm trying to build, is that pathway, so that those advisors, in the absence of being able to have an advice conversation about it, about yes, you should be in this, and yes, you should be allocating across these tokens. Instead, they can say, no, but go talk to, I'm going to refer you across to SwiftX because I know these guys and I trust them, and you can set up an account with them and they can help you get on board.
Yeah. And from an education standpoint as well, like, I'm not saying that everyone, if we had financial advice available in crypto, like everyone would go to a financial advisor, just like not everyone goes, to get advice on equities or whatever it may be. But just not having that option means you have to go to other avenues. Like, I know YouTube and TikTok is a massive avenue for crypto education, and often like people are getting advice here, even though you have the not financial advice disclaimer there. But and that's where things can, some are reputable, but others, we can really go pear-shaped. So how important is it to have that, and how do you even educate the financial advisors on that? Because they have a steep learning curve as well, right?
They do. Yeah, I actually learnt this stat from your boss, Jason Titman, your CEO, that 85% of crypto education comes from social media, from YouTube or TikTok and social media. So yeah, that's the vast majority. And why? It's because there's an absence of it coming from those advised sources. So, for example, I've built an online education program for financial advisors, and I've got that in with the Financial Advice Association of Australia, the peak body for advisors, looking to get it approved so it can be CPD accredited. And they're really, they normally turn it around in 3 to 5 days. It's been a month, and they're still, they're struggling with it because it's a challenge for them to wrap their heads around it. I get that. I totally understand. But there is an absence of it. I've belonged to them and the Stockbrokers and Investment Advisors Association for over a year, to both of them. There's not been a single article about cryptocurrency, not a single webinar, presentation, course, nothing. It's zero, nothing coming from that side. So it's understandable that the education level is really low there, and a lot of them do really want it. I'd say that there's probably 20% of advisors are really thirsty for it and want to see the value of it. And the rest are probably like, at some point, a friend of mine said, at some point the conversation stops being, do you believe in this as an asset, and starts being, how are you going to keep up with your competitors, because that's what they're doing. So the industry will come, it will get there, but I'm trying to accelerate that. And to answer the question more specifically, because I've gone around in a circle, what am I doing? I'm now focusing on giving visibility to financial advisors in the platforms that they're currently using of their clients' crypto holdings. So that I'm building a data aggregation service, plugging into the big platforms that financial advisors use every day to manage their clients, so that they can see clients who already have crypto. They can see it sitting on their platforms. They can see it on their portfolio view. Here's your equities. Here's your property. Here's your crypto. Because that's going to be the thing that then makes them go, I need to learn more about this.
Yeah, true.
And then when they learn more about it, they go, there's a real role for this in some of my clients' portfolio, and then they start referring, providing access to that through exchanges such as SwiftX.
Yeah, and I guess what we're talking about in a nutshell today, like, while we've been very heavily focused on the financial advisor element of this all, it is just understanding, like, where are we on the maturity cycle of, I guess, adoption of blockchain and crypto, the same way we went through Web 2 adoption, and let's even call smartphone as an adoption. That went really quickly, but I mean, it was still like, we started with the BlackBerry, right?
Yeah.
So, from all of your experience in the past, roles that you've had, you mentioned for a bit that you've worked in a marketing sort of capacity as well. Like, you sort of understand, what the tech can bring, but what the market needs to see. Where do you sort of see, what do you see is like the next big pivotal thing for cryptocurrencies that's going to get us closer to mainstream adoption? Because then a lot of these other ancillary pieces, I feel like they just come into line through organic, like they have to, like they can't ignore it anymore.
Yeah.
We've seen the ETF, we've seen sovereign wealth funds, like you said, the government treasury starting to look into it, corporate treasuries. Like, has there been enough things marked off for you, or do you think, like, we still need X to really get over that 50% mark?
Well, if you overlay the adoption curve of crypto against, say, the internet, we are sitting at about 2002, 2003 levels
Okay.
compared to the internet.
Yeah, okay.
So there's a lot of growth,
Yeah.
and we're tracking pretty much exactly, maybe just slightly faster than how quickly the internet has been adopted. So I think that we're on that same adoption curve a bit faster. The only thing beating crypto is AI adoption.
Yeah, okay.
And I think that AI is going to play a role in what's going to drive it forward. But I think that a lot of it is going to be, if you look at what the research says, the main barrier of why investors are not getting into it is that they want advice, they want some form of advice, and they can't get it. So regulatory clarity is going to unlock that. And education, and that applies to the advisors as well. So I think that, regulatory clarity at the moment is misunderstood. People don't understand they can provide general advice; they just can't provide product advice, for example. So helping people understand that will help, but ASIC will get there eventually, and then it'll open it up. But education is probably the biggest factor to both advisors and retail investors to open it up. But people have to want to step into that. You can't force it on people, which is why things like data visibility is the way to trigger people wanting it. And I think the other key thing here is ETFs as well. If you look at the rate of adoption for ETFs, so if you look at the iBit, iShares, the BlackRock's ETF, Bitcoin ETF, so that the biggest ETF is the first ETF, the BlackRock's Gold ETF. That's got $30 billion of funds under management sitting in it, and that's a 20-year-old exchange-traded fund. When they brought out their Bitcoin ETF, it hit 70. It's now 70 billion. It basically doubled the gold ETF in 6 months or 8 months. So in 8 months, it overtook a 20-year-old, Bitcoin gold ETF in volume, in inflows. So that shows that the demand is there if you can make it more accessible. And the adoption is still just growing, exponentially on that. So we hit $70 billion of the gold ETF, the Bitcoin ETF, in about 340 days. It took the gold ETF 1,600 days to hit that same level, and that was the next fastest.
Yeah, wow.
So it's done at 5x, 4x, quicker. So I think that ETFs are going to be a big role of driving that adoption. But ETFs are really limited as an investment structure compared to direct ownership. So it's not for everyone, but it might be an entry point for a lot of people.
Yeah, I like these little facts. I like the ASX one and the ETF one. Definitely going to use that at the barbecue, as we like to say.
You'll get kicked out.
Yeah, probably.
Get us to leave.
But listen, thank you so much, Andrew, for coming on.
This has been great.
I think you've brought definitely a different angle to crypto, maybe from the financial advice point of view. But really exciting space to kind of keep an eye on. I know, as a business and SwiftX, we're always seeking, that next wave of adoption. And I think financial advice is going to provide that. So yeah, want to wait and see, and maybe we'll have to get you on when that eventually happens.
Well, exactly. And I think, you don't need to wait. I think AI gives the opportunity to actually lead on some of that advice as well, because, that's a whole nother part of this conversation. We can do it another time. But
very true. We didn't get to touch that.
AI is a great entry point for especially younger investors to get to start getting some of the benefits of advice.
Yep.
Absolutely.
Well said.
Awesome. Well, thank you again. And thank you guys for listening, and see you next week.
Catch you next time.